Should you quit trading Forex and start trading stocks instead? Stick around. Hey guys, warm welcome to you. All right, thank you for joining me. So, traders generally come into active trading from one of two angles I find. Number one is they've been investing for a while and they go, hey, I've been investing, I want to kind of get involved in active trading. Others come in from fresh, like they have no idea what trading is all about, and they tend to come into either Forex or crypto. And that's generally because the marketing machine around Forex is much stronger, and especially as it's much more international. You know, it's an international pull. I know that guys in the US tend to be more stock orientated, but internationally, Forex kind of pulls people in, low barrier to entry. There's lots of hype around it, and it's kind of normally the way most people cut their teeth. And a lot of traders who are trading Forex kind of come up to this situation where they go, you know what, it's not quite what I expected. I thought I'd be doing better. I'm not really getting the traction that I want. And let's be clear here, guys, there's going to be a chunk of people who come in, think it's easy money, and disappear. And that's not going to be you, because you're kind of watching videos on YouTube, you're reading books, you're studying, you're trying to improve as a trader. So there's always going to be a big amount of people who come in with the wrong idea about it and then disappear. The question is if you've been trading Forex for a while and you aren't getting the traction that you want, you're not profitable, you're not getting the success that you want in trading, should you move to stocks? And it's a valid question, right? Because often people see people trading stocks and go, oh, they're doing much better, maybe I should be doing this. There's plenty of reasons, but it's not quite as simple as that. One thing to point out, guys, is the skill you develop in any market is interchangeable. So your discipline, your strategy, the way you approach the market, your journaling, your standards for how you trade, all these things are interchangeable, and they are the core to successful trading. The discipline aspect is a big one, as we know. We've kind of talked about this many times before. How you're journaling, your plan, your setups, being patient, knowing when to press the trade, your risk management, all these things are interchangeable whether you're trading currencies, whether you're trading crypto, or trading stocks, bonds, anything. And these are always worth persevering with and improving. And if you're always working on those, they are then interchangeable with different kind of market environments. The trap that you can fall into is if you're trading one way, thinking that another market is easier. Now, it may be a situation where that market is easier in terms of there's a bigger trend there, which I always say, and I've said before, guys, if there's a big trend behind something, that makes your life easier because you align yourself with the trend and then use those short-term strategies. That could technically be considered easier. If we look at last year, especially with tech stocks, big rally on a lot of tech stocks, it was easier to try to pinpoint longs and trying to find longs of strong stocks than it was to try to trade some other markets, because you had the likelihood that the market is going to push high. Of course, it has pullbacks, but it makes your life a lot easier. But saying that, you still have to have the core competencies of a good trader. You still have to have that discipline. You still have to have all those other things. And so if you're trading Forex now and you're looking at stocks and you're thinking, this looks like it's good, just be careful your reasons for going over to stocks. Now, if you have your discipline nailed, if you have your plan nailed, if you have all those other things and you feel like you've got at least a decent starting point for those, but you're struggling with Forex, then maybe you can consider stocks and go, actually, and who knows what's going to happen this year, guys, but you can look at it and go, actually, the way they move and the attributes of stocks might suit me better. Now, that's a valid reason to switch. You might say you quite like the gaps in stocks. You like the opening session. Many stock traders like to trade the open because that's the most volatile period. You like the fact that you can filter and you can trade specific stocks that are trending or kind of in the pattern of what you like. That's a good, valid reason to switch. But what is not a valid reason to switch is to say, hey, I'm breaking my rules, I'm not getting the traction, I'm doing things that even if whatever market you did those in, you'd still have the same results. So it's time to kind of, if you're thinking of this question, it's taking a step back and objectively looking and going, why am I thinking this? Am I thinking it because it's easier, or am I thinking it because actually these stocks will align better with the way that I trade, and I've learned a little bit more about how I trade with Forex. I've learned that I like to trade a few hours a day. I've learned that I like to be an active day trader. I've learned that I don't want to hold positions overnight, whatever the situation may be, and that would align better with this instrument. That's valid. But if you are honestly and objectively looking at your results, you're saying, well, every now and then I'm trading on tilt, every now and then I'm kind of breaking my rules, and that's the indicator of loss, or that's the actual variable that's really adding to the loss, then it doesn't matter what you trade. You need to nail that down first. And my recommendation would always be stick with what you're doing, don't change the market, but work on that one thing. Work on improving the discipline, work on improving your trading plan, all that kind of stuff. And then you can objectively look at it and go, you know what, I think my results would be better if I was trading this vehicle. And that's fine, because don't forget, as traders, as you go through the years, you will switch to different markets and different vehicles and different setups. That's just the nature of how the markets adjust and adapt, and how you adjust and adapt as a trader. The trader I was 20 years ago is not the trader I am now. And the markets have evolved. I've traded different markets because of the different volatility and the different way that I wanted to trade and the different edges that I've perceived I've had at the time and all this kind of stuff. And so there's nothing wrong with swapping and changing, but doing it for the right reasons and not hoping that by switching that will magically fix your discipline issues, that will magically fix the reason you break the rules, it will magically fix FOMO, it will magically fix trading on tilt, because it won't. That needs to be fixed first before you then go, right, I fixed it, what's the best instrument for me? And then looking around and going, it might be stocks, it might be Forex, it might be commodities, it might be indices, it might be this. But fix that core competency first, and then you're in a great place to look, adjust, and find something that suits you as a trader. Take care, guys. Keep your risk managed. I'll see you in the next one. Bye-bye.